What's up, everyone? Welcome to the Akuma Fund. Today we're going to be, the video is about options trading. One of my main videography clients, he trades options. So I decided to sit him down and interview him and ask him some questions about the options. Thank you guys very much for clicking on the video. Enjoy. Hope you learn a lot.
This is a day I've been looking forward to for 2.5 years.
Yellow paint. Nathan made the black line.
Where they're moved for about 3 minutes, then line, then they get a little point.
We dedicate this to these people out here getting rain. But the pursuit of the money is reality. Never phone on a click that you can't evaluate. See,
Do you want to know what I really do? I do. I remodel houses.
You remodel houses?
Yeah.
Okay. And do you invest in your free time?
I do.
And what kind of investments do you make?
I invest in options. Options on stocks.
And what kind of options specifically?
Calls and puts.
Calls and puts. Can you explain very briefly what is a call and a put?
A call is a right to buy stock at a certain price, and a call implies that you are hoping for the stock to go up in value. And a put is a right to force somebody to take the stock from you, to buy the stock from you at a certain price, and your intention is that the stock is going down in value. That's what you're betting on. That's kind of a simplistic view, but that's two kind of versions of calls and puts. There are lots of ways to use them. Using those, the basic intrinsic tools of calls and puts.
And why specifically do you use options and puts in your strategy, in your investment strategy?
Oh, options give you leverage. So, depending on how much time I need an option for a stock on, it can be anywhere from 0.5% of the value of the stock for a short period of time to 2, 3, 4, 5% for a longer period of time. So I can get the gains on, say, 100 shares of stock without having to buy the 100 shares of stock and only investing a fraction of the cost of the stock. So yeah, leverage.
So when a lot of people hear the word leverage, they hear risk. Is using your strategy of using options and calls, is it a risky strategy?
Anything you do in the stock market is risky to start off. I'm going to say yes, people should know that there's quite a bit of risk involved in trading options. And the reason I say that is they only last for a certain amount of time, and then they expire. If you've bought an option and you didn't give yourself enough time for the stock to get in the money, which is, where you want it to go to make money, then it might expire before you ever get paid. So some people might see that as risky.
So it's the time constraints that make it a riskier type investment in your eyes?
Time is a big piece of what makes it risky.
And what is the other part that makes it risky?
The market could go the opposite direction, and then your option expires worthless, and whatever you invested you lose 100% of.
So why do you choose trading options over trading stocks, over investing long term, over investing short term, over day trading? Why do you specifically choose options trading over all of the other investment strategies?
Well, again, leverage. I don't have a lot to invest. I'm just a contractor. I'm a working guy. So I don't have a lot to invest. And I don't necessarily feel that being in the stock is a better position to be than being in the option. If let's say I think I want to buy 100 shares of a stock, I probably couldn't afford 100 shares unless it's something that's, $5 or $10 or $20 a share or something like that. So options gives me the ability to trade and be involved in the ups or downs of the market without having to put a huge investment in. So it's all about how much you have to invest to participate.
So now I'm going to ask you some questions about your particular journey
Okay,
with investing.
sure.
So I'm going to have to ask you, to start it off, what is the worst options trade you've ever made? And then of course we're going to ask, what is the best options trade you've ever made?
When I was younger, before I understood options, I bought a whole bunch of options on Microsoft, and with a fairly short time period, and didn't manage my trade at all, and it expired worthless. And it was a big investment. I put all my money in one options trade, and it expired worthless. So it was a really stupid trade. That was the worst one.
And your best one? Or your best ones?
I've been doing calendar spreads on a airplane company, and the stock goes up and down enough that I can sell a position, and when the stock goes down, I buy it back at a discount, which is the same as buy low and sell high, except you're doing it in reverse. You sell high and buy low. You buy low after the fact. And then as it goes up, I put on a call, and it goes up in value, and I just keep doing that over and over. And this particular airplane company has been paying me quite well in doing these trades. I'm making money when it goes up, and I'm making money when it goes down, and I don't care which way it goes at any given time. In fact, I can't wait for it to move in any direction, because I've got positions for both directions. And that's, by the way, one of the other things that you can do with options that's a little bit harder to do with the stock itself, is you can bet on it going in both directions at the same time. You can have a position on that you make money if the stock goes up, and you can have a position on that you make money if the stock goes down. And what's different about that particular trade, where you're betting in both directions, is you've got twice as much of an investment. So let's say you've invested about 10% in your options, as opposed to 5% for one direction or the other. So you kind of want to do that on a position, on a stock that you think is going to move. You don't know which way it's going to move, but you think it's going to move a lot in either one direction or the other. So you can bet on both directions, and let's say it's right before earnings. And a lot of times earnings, I saw one stock went down today, 30%, one day. It dropped 30%. That would have been a good stock to have both a call and a put on the same day, because the truth was the stock had really good earnings. It exceeded earnings, but then the company came out and said, well, yeah, we had good earnings, but it doesn't look good going forward. Our competition is kind of eating us alive right now. And so literally the same day they had earnings, the stock went up and then it dropped 30% in the same day. So if you had those kind of positions on, you'd have made money. In fact, the news story on that particular stock said that $30 million was made today by the people who shorted that company. $30 million.
So it sounds to me like you're saying that, or before you even say that, before I say that, what type of environment does your strategy thrive in?
As we speak, we're in the China trade wars, and that environment is pretty good for what I'm doing because we've got volatility, and I like volatility. I want the stocks to move a lot from day to day because the options move a lot. I invested in about 10 companies last week, less than $1,000 a piece, and some of them are up over 100% this week. So volatility is good, unless you're not covering your position for both directions. So I say, if you're going to bet on everything. Bet on the market going up and bet on the market going down. Or if you're betting on a stock, there are stocks that kind of rise and fall with the tide of the market. Do you know what I mean by that?
Yes.
If the market's up, this stock is up. If the market's down, that stock is down. It's just kind of going with the market. And what was I going to say? If you're trading a stock that rises and falls with the market, and let's say you think that this stock is going up, you could buy puts on the market. Like, let's say you've got 5 stocks that you're trading that you think that you're betting on them going up, but you want to protect yourself in case the market goes down. You could buy calls on this. You've got calls on these stocks, these 5 stocks. You could have puts on them too, but that might be more expensive than just buying puts on the market in general, because you can buy puts on the market. So these stocks.
Unfortunately, during the video, my camera did end up dying. Kind of didn't notice. We kept on continuing on the conversation, and one thing that he didn't discuss, well, in the video he did discuss it in person with me, is that you can actually create income from options trading. And I've done this a little bit in the past. If you're on the selling side for the options, let's say you want to sell a put or you want to sell a call option, a covered call option, the person buying it from you pays a fee. So the fee is just cash that's then put into your brokerage account. It's another thing that he was talking about. He mentions also, let's say you do have 100 shares of something, you got put a stock or something, right? You're trading it within a certain zone. You have your covered call, you have your put, and you're getting bounced back the stock if all things are going well. You're generating income from the stock, and then let's say you get put the stock, right? Okay, you got put the stock. Now what you can do is you can sell a put, and if you sell the put, and then you can generate income from the stock. That is another thing he was mentioning, and it's also a very, very important part to me of options trading. I think I might introduce it back into my strategy. Thank you guys very, very much for watching the video. This has been Emmanuel Ardenia from the Akuma Fund. I'm out.